Hi everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Hand Tech Markets, on Tuesday, the 12th of August. The European markets have opened with a slight amount of caution, slightly lower, certainly on the FTSE and the DAX, and there's no real reason that's actually happened overnight, but I just think that investors are looking on the cautious side of an offer from Vladimir Putin to give humanitarian aid to Ukraine, and that comes amid reports that there are troops on the border. It would suggest that I think, trying to get troops inside Ukraine through surreptitious means, and I think that that just suggests that investors are a little bit cautious as to what that could lead to in the longer term. So I think that's probably why markets are slightly cautious today. You've certainly seen equity markets just drift backwards. There was a slightly positive close on the Wall Street markets, but then Asian markets were pretty much mixed, and now European markets are lower. So you can see a bit of a trend going on there, and also what we've seen is the dollar strengthening as well. But in terms of risk appetite, certainly yesterday's move on the VIX would suggest that volatility is falling away. That would suggest that yesterday was a fairly positive day for equities, but I'm not entirely sure that that will continue. Certainly, if this outlook remains the theme of today, and also, as I said, dollar strengthening. We're seeing the that dollar index pulling higher once again, and I'll talk about a couple of dollar related charts in a bit. But certainly it looks like that dollar is strengthening once again. In terms of our economic data today, not a great deal going on once again today, apart from the German ZEW economic sentiment that comes out at 10 o'clock. Expectations are for 17.0, and that's again a down on the 27.1 that we saw last month. So these German indicators certainly are beginning to trend lower, and that is not good for the German economy going forward. So let's see if that theme continues today at 10 o'clock. But other than that, there's not a great deal moving in these markets, so I think people or traders will be focusing on geopolitical events once again, and at the moment there is caution ahead. So that leads me on to my chart of the day, which is dollar Swiss. I've talked about the euro, which I think is engaged in a little bit of what I believe is a recovery formation. It's not taking off quite yet, but I think dollar Swiss is in the same sort of thing. Dollar Swiss is traded the other way around because the dollar is the base currency in dollar Swiss, whereas the euro is the base currency in euro dollar. So therefore, a weaker dollar Swiss suggests Swiss franc strength, and at the moment we've seen in the past month or so this quite solid move higher in the dollar Swiss, but we're now entering into a bit of a consolidation phase, and that has been coincided with these momentum indicators, which are drifting lower now. You've had the stochastics, which are in decline, also the MACD lines. Look at that, we've had a crossover there, which certainly suggests that the upside potential, I think, is beginning to wane in this up leg on dollar Swiss. The RSI remains fairly positive, although you could argue there is a slight divergence, bearish divergence on that. But certainly at the moment you've had a rebound in the dollar in the past couple of days, and that is shown on the hourly chart here. But I think anything, this is over the past week or so on the hourly chart, I think anything that posts a lower high, probably below that 93 big figure, which is a bit of the initial real resistance comes in around, sorry, 91 big figure is where the resistance comes in on this, and I think that any lower high below there might start to sort of bring through this certainly this consolidation that we've got going on, and perhaps even turn into a correction. But at the moment, as I said, we've got this drift sideways that is just pulling higher once again, but until you get a move above that 91 big figure mark, I'm not I'm not calling this as a bullish move yet, because you've also got the 91.15 mark thereabouts as the resistance. Um, so that is basically what we're looking at on dollar Swiss. But yeah, I just think that these on the daily chart, these momentum indicators are all sort of just pointing towards a bit of a corrective phase rather than the next bullish move on the upside. So I think that that could ultimately drag dollar Swiss back lower again to retest that 90.40 mark. And I think if you started to close below that 90.40 mark, then I think you could be in business for a correction. But you're not certainly not calling it yet. But it's just as I said, it's a quite a similar sort of story to the euro dollar chart as well. So I wish you good luck in your trading on dollar Swiss today, and the German ZEW might have an impact later. Certainly, if it's disappointing, that would lead to dollar strength, which would also probably filter through to a higher dollar Swiss chart. So it could happen at 10 o'clock. But until that happens, I wish you good luck in your trading, and I'll speak to you later. Thank you.